Early Tesla investor. Ibrahim, thanks for being with us today.
My pleasure. Good morning, Morgan. How are you? Good to see you again.
Good to see you, too. So we just heard Phil lay out some of those highlights from the earnings results yesterday, given the fact that it's falling flat, at least, well, more than flat. The fact that the stock is down and falling flat with investors today. I wonder what you think about the results.
Well, I mean, I understand the need for all the hyping of the company right now, because they're losing their first mover advantage, right? So all these legacy car makers are entering the space. The fact that the Audi e-tron supplanted the Model 3 as the #1 selling car in Norway says that when consumers have options, they're not just picking Tesla. So then what do you do when you're trying to stay relevant in a field that's about to be crowded and you're losing your first mover advantage? You have to start creating, maybe an identity and community around the brand, which I think what Tesla is trying to do right now is keep it edgy and interesting. That's why I actually think partially why they invested in Bitcoin, which personally confused me as a sustainability investor, why they would invest in something that is so carbon intensive while they're trying to be the face of clean tech, which I'm grateful for, obviously, as an investor, but it completely confused me.
Yeah, and I think the fact that he did sell some of those Bitcoin in the quarter helped to power the bottom line as well. Does that mean that you think that Tesla should just be steering clear of Bitcoin and cryptocurrencies in general?
I think this is not, this is extremely carbon intensive application. And investing in solar, which is great. They did this fantastic vertical integration where they did solar panels, they did battery storage. You can this way supplant the dirty grid and make sure that your power is clean, you're generating it, your car is clean, et cetera. And then going and investing in this, like I said, probably one of the, what are the numbers? Something like, Bitcoin mining is the equivalent energy use of a country like Argentina and Sweden. We're already behind on renewable energy integration worldwide. We don't need one more additional space for energy to be used up. We're already digitizing everything. This is problematic for a clean tech company as far as I'm concerned.
Ibrahim, it's one thing for the other players to start to catch up and take sand from the sandbox, as you point out. It's another for a government to actively champion the local players that they have, and that's what the street is wondering if China's doing. Is that what's happening in China right now?
I can't really speak to China. I know the White House today, required the U.S. grid to have 80% of its power coming from emissions-free sources this morning, which I think is, very exciting, because as we know, the transition from a high carbon to a low carbon economy, which includes obviously electrifying the transportation sector and the energy sector, having a carbon-free energy sector, upgrading all our infrastructure to their 21st century clean counterparts. That's going to be probably the biggest investment opportunity in human history as we transition that. So I am very bullish about what we're doing in our country here, where we were falling behind as we were championing expiring sectors in the past, like coal, which fortunately I'm sure you read that the coal unions now are also championing a low carbon future as well. So this administration is getting us ready to capitalize on what will be the biggest investment in human history, which is upgrading all our infrastructure from its 19th and 20th century high carbon intensity technologies to their 21st century low carbon counterparts.
Ibrahim, coming back to the quarter itself at Tesla, our Jim Cramer in the last hour was making the point that EBIT from the actual business was down. And in fact, I do believe Tesla made more money from trading Bitcoin this quarter than it did from that business. Is that a concern to you?
Of course, it's a concern to me. A bigger concern to me is the fact that when all the legacy car makers enter the EV market, right? GM has 30 models coming out by 2025. 20 of them will be sold in the US alone. Audi, Mercedes-Benz, did you see that 53-inch dashboard screen? That's going to make the Tesla 17-inch screen look like the first generation iPhone, for God's sake. But all of these big legacy car companies that are buying these environmental credits will no longer have to buy them. So that 400 million and change that comes from selling these environmental credits is going to start disappearing over time as these legacy car makers no longer need to buy them, which is very problematic for Tesla and its valuation.
Shepard Smith here. Thanks for watching CNBC on YouTube.